Okay, I see Representative Wright has been waiting patiently. If you're ready for HB 10. How are the cards? Okay, got a few. Oh, okay. Okay, House Bill 10, Representative Wright, whenever you're ready, please proceed.
Got it. Thank you, Mr. Chair, Senators. Appreciate a chance to discuss this HB 10. I know there's a lot of information in the bill, over 140 pages. There's been changes at different times. We're doing a number of things with it. So I'll do my best to kind of lay it out there and then perhaps go through questions and stuff instead of trying to touch everything. As passed in the House, essentially the rate, the sales tax rate, was changed to 0.4 instead of 0.45. That was actually done in committee the first time. It also aligns a number of bases. The last, when we made amendments on the House floor, we took out the repeal of the manufacturing equipment one. I know that was a significant one. It doesn't have an effect on our fiscal note because that's essentially about locals being able to collect sales tax on it. Let's see here as well. I mean, essentially what it does is it makes the sales tax permanent beyond, obviously. That is the main source of revenue there. Let's see. Sorry. I think maybe we should just take that. I don't, it's pretty basic. They'll take questions.
It's a simple bill, right?
Yeah, no kidding.
So let me ask you, I've had some concerns raised to me about the vendor's comp component. Can you tell me what you're doing with vendor's comp and what the reasoning is?
Yeah, sure. So in vendor's comp, what you have is a credit given to retail, under the circumstances that there's a limited amount that's credited to them for the administration, so to speak, of sales taxes to, perhaps like 64 parishes or 10 parishes or whatever. The secretary's here, so I'm going to let him follow up on it, but that's the basics.
Sure. Yeah, Secretary Nelson.
Yeah, sure. So Richard Dells, Secretary of Revenue. The vendor's comp is capped at $1,500 a month on each monthly remittance. And so it adds up to be about, I think, $30 million or so per year is what the cost of that is. And so we propose basically getting rid of that provision and just using that money as part of the base to reduce the income tax. That was one of the pay-fors that we put forward. I think about half the states have no provision to do that. Louisiana does, and that was one way that we were just looking to make up that revenue as really an exemption. It's kind of in the same realm as that.
Okay, members, any questions? Senator Luno for some questions.
You got a 70-page bill and you talked about it for about 30 seconds? I don't know what the hell it's doing, but you might want to explain this a little bit better. I mean, I'm just saying for me, nobody else.
No, understood. I think it's actually 140 pages for its work, but I don't want to make your point even more, obviously. No, I mean, essentially the sales tax extension or making it permanent is one of the main sources of revenue moving forward in the Louisiana Forward Plan. Originally, the main thing is that the 0.45 was a temporary sales tax that goes off the books within the next 8 months, right? And so this was a decision to basically, as part of the plan, the idea of working to eliminate income tax and relying more on sales tax as we transfer in the plan, over the next 4 to 5 years, right? We align bases between locals and state. I know that has been a significant issue in collection and administration of it. And then, of course, in the meantime, it's rolling off a number of exemptions or repealing a number of exemptions, which is where it gets sort of complicated. Obviously, I'll show you one of my prized possessions this last session is the tax exemption book that we got for Ways. I'm sure you have a copy of it. The sales tax portion is very significant, as you can imagine. I mean, the sales tax exemptions over the years, every single one of them, I think you could make a solid argument for, or at least a reasonable argument for. But the problem is it very much like a colander, the more you exempt, the less revenue that's coming through. So, and like I said, the last House floor amendments, we took out the MME and we had some other technical amendments, but for the most part, it was there was no fiscal note. There was a amendment that would repeal the exemption for diapers. That was, I think, came in 2021. Our understanding, we don't have it officially done, but our understanding is it's about $1 million total. But so everything that came out of the House Ways and Means Committee, had and through appropriations was the most significant part of fiscal note.
Okay, so we have some more questions for you. Senator Bass.
Thank you, Mr. Chairman. Welcome. I know you've been waiting a while. There was a handsome young man with you. I'm sure he'd rather be doing something else on a Sunday, but welcome. I'm just wondering, if we had a centralized sales tax collection, will we still need to have vendors' compensation? Those states that, I know it's us in Colorado that don't have that centralized collection. So maybe the Secretary, do you think we would still need that vendors' compensation if we had a centralized sales tax collection?
Well, I mean, I think that the state giving vendors comp is in compensation for the state levying a sales tax. So the state would still levy a sales tax. I mean, I think on the local level, the administration of the local tax is what makes us more complicated, right? There's been discussions in the past in the legislature to centralize sales tax collection. This bill does not centralize sales tax collection. I'll tell you that there is a significant appetite among the business community to make it an easier system to administer, because I think it is pretty difficult because we have so many different tax collectors on a local level.
Okay. My next question, there's a long list of sales tax exemptions that are both left in and repealed. My understanding is diapers was put back into the sales tax exemption. Also, the purchase of Bibles and songbooks was put back in. Was there anything else in the discussion or amendments in the House that was put back in that didn't come out?
Manufacturing machinery and equipment, that exemption or exclusion, I think it really is at the time, is about the locals being able to collect the sales tax on that. So it doesn't have a fiscal note for the state because it's already staying there on the state side.
So we're going to keep an exemption for the cost of printing a news publication. That's in the retained sales tax exemptions.
So there's an he's talking about MM&E, the manufacturing.
No, I understand that. I'm just continuing to go down this list. It looks like we're going to keep the cost price for printing a news publication. We're keeping that as an exemption?
That's right.
Okay. We're keeping an exemption for pari-mutuel horse racetracks wagering, yes?
Yes.
We're keeping an exemption for off-track wagering facilities.
And the thought was, I think, on those is that they remit gaming taxes on different elements, and so that's why they don't charge the sales tax.
Okay. We're keeping an exemption for surface preparation, painting, and coating fixed or rotary wing aircraft and certified transport category aircraft registered outside of this state. How many companies actually do that in the state? Because that's pretty specific.
I'll take that one, Senator Bass. Luke Morris for the Department of Revenue. It is very specific. The Department of Revenue initiated an audit, and the taxpayer was not pleased with the audit, so they sought legislation here to exempt that activity going forward. So as far as I know, it's only one taxpayer.
So we have an exemption for one taxpayer left in this?
That's correct, unless there's been more since it was instituted, but at the time, they were the only one.
I know you can't tell me the name, but how much is that exemption benefiting that one individual?
I don't remember. It
Okay.
was a few years ago.
It looks like we're also keeping the work product of certain professionals in here. Revised statute 47:30116E. What professionals are we keeping their work product exempt?
So that would be everything for any work professional that is licensed pursuant to the separate title that handles that. So any accountants, architects, lawyers, anyone who is giving a tangible piece of property to their client at the end of the day, whether that's a will and testament or blueprints to a house, the exemption makes sure that the service is not taxable, and just because there is a one piece of paper being transferred, that doesn't attach taxability to the transaction.
So we're keeping those exemption, but we're removing the exemption for donation of toys?
I believe so. Let me see.
Well, I'm looking for fixed ring rotary stuff. You got that, that's better.
Yes, I think that one is scheduled to be sunset. I'm just looking at the amounts. There's been no amounts reported for that one for several years.
Okay, so this exemption that benefits one person, we're going to keep that, but we're going to take off and repeal an exemption for purchases by a nonprofit entity that sells donated goods, as many religious organizations do. Yes?
Yes.
Okay.
Yes.
Also on this list of exemptions that will be kept, it looks like sales of butane, propane, and other liquefied petroleum gases for private and residential consumption seems to be on both the repealed list and on the list of exemptions being kept. Can you tell me what the difference in those two are?
Actually, Senator, I should clarify, on the House side, on the floor, among the floor amendments was to clean that part up. Yes, it was confusing. I kept telling people on the House side, no, it's taken care of. There's no sales tax there. But there was this one little part, and it seems as though it's based on some work previously done. The .45 part, it wasn't cleaned up. So that should be out, and it should be exempted.
So we're keeping the one exemption for one person, but we are repealing the exemption for sales of admission to entertainment events by a little theater organization. So I'm now going to pay sales tax when I go to watch my kids in a play or a performance? Okay. So we're keeping this exemption for the one person, but sales of admission to musical performance sponsored by a nonprofit organization. So when my choir goes and sings and there's an admission to that from my church, they're now paying sales tax for that. Is that the right one?
No, I thought that was actually
Sales of admission to musical performances sponsored by a nonprofit organization.
Yes, that's 305.7. Yes, it's that is one scheduled to sunset.
So my example, my choir goes to perform and to cover some expense for another organization at $10, they're now going to pay tax to go listen to my choir.
I think in that example, there's probably another exemption that's going to apply. As long as it's being used for fundraising type activities, I think there's a different exemption that would be applicable.
Okay, sales of admissions to entertainment events sponsored by domestic, nonprofit, charitable, religious, and educational organizations. That's the next one that's being repealed. So is that repealed also, and this exemption for the one stays?
I think that's the case. Let me double check.
Well, I mean, the next one is sales of admissions, parking fees, and tangible personal property at events sponsored by domestic, civic, educational, historical, charitable, fraternal, or religious nonprofits. It appears that a lot of religious nonprofits are being removed from the exempt list and being placed on the repealed of exemption list. Also, sales and purchases by certain organizations that provide training for blind people. That's being removed from the exemption list, yes?
Yes, but I would add that provision does not have an impact, a cost estimate.
Okay. We're also, for the Second Amendment sales tax holiday, we're repealing that, but we're leaving this exemption for the one person. Yes?
Yes.
Okay. Tickets to a dance, drama, or performing arts presentation by certain nonprofit. Does that include my kids' performances at school?
All right, I'm just trying to find the.
No, that's fine. And there's another one, construction materials and operating supplies for certain nonprofit retirement centers. So we're moving that for retirement, but we're going to leave the ones for the one person.
So the previous one you just mentioned, the tickets to dance or performing arts performances, that one is currently subject to tax right now and has been since before 2016. So this would just sunset the exemption, but continue the taxability of it.
And as I understand it, we were originally going to repeal the exemption for the Council on Aging, but that's been added back in, correct?
Yes, that was added back in.
Okay. Here's another one, revised statute 47:315.5, sales tax collected by qualified charitable institutions, as defined there. So we're repealing, is that another religious organization, or?
That one applies to approved charitable institutions, and it has been subject to tax since 2018.
Even though it was on the exempt list? How does that happen?
So, Senator Bass, a lot of these exemptions have been suspended because as part of the .45 renewal, I think there were 66 maybe or 60 so exemptions that were suspended as part of that. And so all of those exemptions that were suspended for the last 7 years, we said, let's just get rid of that exemption. It hasn't been in place for 7 years. So that's where a lot of those changes came from, is that those exemptions are currently suspended. And then the other side was that if they had a different, for example, if they applied only to the state and not to the local governments, then we said, well, let's make those bases the same. So we either got rid of it for the state and the locals, or we applied it from the state down to the locals. And then some of the exemptions also, they really had no one ever claiming them. And so if it never had anybody claim it, then we also said, let's simplify it and let's get rid of that exemption as well. So I understand every single one of these exemptions was put in place for a reason. That's the thought. Nobody comes here and lobbies for an exemption because they don't intend to use it. It's just there's a lot of them that are either historically suspended, they're not ever claimed by anybody, or the difference, they differ between the state and the local base, which is part of the reason that we're cleaning them up. I think on the one hand, why did we choose not to get rid of the painting of non-resident aircraft? I think the argument there is that if you tax that, then they're just going to go get obviously it's a plane, it can fly somewhere else and it'll just go get painted somewhere else, as opposed to put 10% tax on the service or on the paint for doing that.
But,
so, I mean, I think that
they is a plural word. You're telling me this is an individual. So I'm just, there's one person that's benefiting from this, and we're keeping that on the exempt list.
So, Senator, if you
one entity, excuse me.
It's up to the legislature. We're here in the Senate now. The House was okay with that one. If you feel like that one should be removed, believe me, I'm always looking for more revenue, especially given some of my friends in the House. So, if you'd like to get rid of that one, we'd be happy to talk to you about it.
Thank you very much.
It's about $500,000 a year.
The exemption for the painting?
Yes.
Okay. Thank you very much, gentlemen. Appreciate it. Thank you, Mr. Chairman.
Okay, questions from Senator Luno?
Thank you, Mr. Vice Chairman. So, first of all, Dr. Hall, don't tell your boss on me, but Bibles, songbooks, hadn't that been litigated on a constitutional challenge?
Yes, sir, it is.
What was the outcome of that?
The department was enjoined from enforcing that exemption. So it has been added back into the legislation, but it's still unenforceable under Supreme Court precedent.
So we're going to take on another $1 million constitutional challenge to look, I'm the finance chairman at my church. I get it, but, really? Is that a good idea?
Well, so you're saying about leaving the exemption in place? We're not passing it again. We're just leaving it in current law. So it exists in current law. I think we've been enjoined in the Supreme Court case from enacting that, I think, is what the situation is. That was why we proposed to pull it out, because we had a Supreme Court case to basically make it ineffective.
Okay.
So we're not changing current law. I don't think we're going to get sued because we leave it in there. I think it's more of an optics option.
But we could get sued because it's in there, because it's in the law, correct?
Well, I think we've already been sued, and so as a result of that, we're not enforcing that, or we're not enforcing that exemption right now.
What I'm getting at is, and you and I both know the answer to this question, we could get sued again and pay to go through that litigation again because we're leaving it in there, and the court's already ruled on it.
Senator, I believe there are lawyers who like to sue.
You got there, and there are entities that like to hire them to sue. So
this was an amendment made on the House floor to put that back in there.
At some point in time, you got to say enough's enough. I mean, really. All right.
Questions from Senator Bowie?
Thank you, Mr. Vice Chair. Gentlemen, I want to just sort of bottom line question. In this master plan, if you will, there are a number of things we're trying to achieve. The 0.45 we want to make permanent at 0.40. 2% state sales tax we want to make permanent, and a number of other things. Bottom line, if everything is successful, and we're saying a part of the major reason we're doing this piece is because of the fiscal cliff. At the end of the day, if everything is successful, will we still have a shortfall, a deficit, or will we be able to balance the budget if everything passes?
So if everything passes, there won't be a deficit, there won't be a fiscal cliff. I mean, it would, and a lot of that would come from both this bill currently, which preserves the current sales tax, or 0.4% of the sales tax, maintains the 2% business utilities. There was the other $500 million from the services bill, and then the constitutional amendment 2, which will basically free up the money that would currently go to the Revenue Stabilization Fund and give the legislature more authority to use that. And so if all those things pass, it would not have a fiscal cliff. It would still result in a tax reduction, but that would solve the problem of the fiscal cliff.
But now we do know that many of those things are being reconciled, right? Because many of the services have been disallowed and so forth. So unless something else happens, we will in fact end up with a shortfall. I'm hearing as much as $100 million to $350 million. So what do we really know about what's the end result here?
So as I mentioned earlier, the services bill, Representative Reiser's services bill, was about a $500 million revenue increase, right? To the extent that comes off, then we're going to have to make up for that revenue somewhere else, or accept that as a loss on top of the fiscal cliff.
And obviously, because we're asking our citizens to sacrifice and businesses to sacrifice on some very important credits and so forth, we really need to get it right to the point where if, in fact, we end up with a shortfall, then it means we've actually done some things that really does not solve our fundamental problem. And so I just wanted to ask that basic question, because we see some things being reconciled based on feedback that says we will have some serious unintended consequences for locals as well. So I just need to ask that bottom line question as we could continue to go forward. Thank you, gentlemen, and thank you, Mr. Vice Chair. I have no other questions.
All right. I had a couple of questions, and I'm going to move to Senator Reese. Give me the rationale for the reduction to the 0.40 instead of just staying at the 0.45, because I thought what we were trying to do here was basically make up for some of the loss that would occur with personal income tax. We was trying to make it up through sales taxes. So why reduce it? I guess I have a little bit of the same concern that I'm hearing from Senator Bowie. Are we going to have enough revenue raisers to make sure that we are not putting ourselves in some kind of deficit or putting ourselves in some kind of situation where we may be having to take some cuts that we don't want to have to go forward with?
I mean, just to address the first part, so essentially, as we were approaching committee in, surveying, checking votes and such like that on the House side, there was just sort of a bias to bring it down a little bit and not identify it with, something that had been done 4 or 5 years ago. And I think the fiscal note on it is somewhere between 35 and 50 million. So it wasn't a fully significant amount, was the way it was looked at. So that's how it went to 0.45 to 0.4 for what it's worth, just to share.
I don't know. It's a little concerning. It's something to think about. I mean, look, if we would have kept it at the 0.45 until we could see what these reductions were going to do for a period of time, and then maybe reduce it that way, like would have been a better way to go. But you all are living and breathing this whole lot more than I am, so I'm sure you're keeping up with this math. At least I hope so. And then just a couple more on these exemptions. And I'm looking a little bit at the repealed sales tax exemptions list also. I heard about some of them that were put back in. I'm looking at, well, I have a list, and I don't know if the numbers are the same, but it's purchases by a nonprofit entity that sells donated goods. I'm thinking about organizations like Goodwill Industries. Do we have any idea? I mean, is that costing us a lot of money? Because I do know Goodwill Industries, they do create jobs and serve a very good role in our community. Is that a significant sum of money involved with Goodwill, an organization like Goodwill?
Vice Chair Jenkins, I was just making sure that I was identifying the right one. So I think the one that you are referencing.
RS 47301-8F, purchases by a nonprofit entity that sells donated goods.
Yes, that has an estimated fiscal impact of about $7 million a year.
$7 million a year? And look at the one for sickle cell disease organizations, 47305.53.
Yes, 305.53. That is currently subject to sales tax, so this would just continue that taxation. But right now, that has been suspended since 2016, that particular exemption.
Okay. All right. Thank you for answering those couple of questions there. Questions from Senator Reese? Trying to get you up. There we go.
Thank you, Mr. Vice Chair. So part of the length of this bill too, it's partly is to unify the base. That's something we want to do. But then aren't you also cleaning up exemptions and exclusions? So you're trying to make some more uniformity in terms of using exemptions versus exclusions. Is that?
Yeah, I would say, so what we did at great time and resource exerted was go through all of the sales tax laws and then basically to reorganize them into subject matter headings. So the statutes will now, you have your definitional section, your levies, of course, but like all of the commercial, farmer, agricultural exemptions, they were scattered all across our sales tax code. So they now have been centralized in that agricultural section of law. But yes, in doing so, a lot of the tax preferences items were classified as exclusions because they were in 301, that definitional section. So we don't think the intent was to create an exclusion, but that is where the statute found itself. So we've reclassified many of the exclusions as exemptions. That's right.
Okay. Thank you, Mr. Chair. Vice Chair.
Okay. So, gentlemen, I think we have some people who want to provide some information. I guess we bring those persons to the table at this time. Call your name if you'll please come up. Lenora Harvey. Please come forward. I'm sorry if I'm mispronouncing your name. Myron Lambert, President, would like to speak. Myron Lambert. I believe it's Mr. Billy Hills? That's right. Yes, sir. Please come forward. President would like to speak. Do we have about three? Okay, ladies first.
All right.
Identify yourself and.
All right. Lenore Heavey, Council on State Taxation, and I know it's been a long day so far. So I'm actually sort of tag teaming this with Jessica Elliott from the Retailers Association, and my organization, Council on State Taxation, is an organization that has around 500 multi-jurisdictional entities in our membership. And we advocate on behalf of fair and efficient tax and non-discriminatory tax administration primarily for multi-jurisdictional entities. And so our objection is just to a tiny piece of this bill, which is, in fact, we've already talked about. The chairman mentioned vendors' compensation. The retailers are. It's not their tax liability. They're actually acting as agents of the state in collecting and remitting and filing these, the tax returns. And so vendors' compensation is actually an important element of a fair and efficient sales tax system. And so even in states where there is centralized collection, we are going to advocate on behalf of retaining, or actually in some cases actually enacting, vendors' compensation. So the state already recognizes that tax collection is in fact complicated and expensive. So for example, local the parish collectors of the sales tax are compensated from the entities on whose behalf they collect the tax, and in many cases they are actually given more than the cost of collection. Now, the current rate of vendors' compensation doesn't even come close to actually compensating these retailers for the time that they spend doing the remittance and the collection and the reporting. So again, we would just really appreciate it if that repeal were removed from this bill.
Yes, sir.
My name is Billy Wheels. I'm the president and CEO of the Blood Center. I actually represent the blood collection agencies across the state of Louisiana. The RS 47-301-16 J and K right now allows us, where we do not pay sales tax on the items used in the collection, testing, processing of blood and blood components that are provided to hospitals across the state of Louisiana. Blood is donated, again, to us. We are a 501c3 not-for-profit. We operate on very, very thin margins. I've heard earlier all throughout the day about what's going on in Florida, Georgia, Texas. They all have these exemptions, as does North Carolina. So we are going to be put in a situation whereby we're going to have a difficult time trying to operate if this sales tax is passed and we have to pay these sales taxes. We're literally a nonprofit organization providing a vital community service to the people of the state of Louisiana. We actually, the employees we hire, we train, we give on-the-job training. We have 250 employees. How can we maintain those things if we continue to have what little bit of profitability we have coming in the door, which is about 1.5%? How are we going to maintain that? We've got to put money back into our operations. We perform a battery of tests. We're licensed by the Food and Drug Administration. We're in a kind of a situation here where we had this exemption back in 2002, signed by Governor Mike Foster at the time, tried to repeal it back in 2016. It was once again given back to us. So here we go again with it once again. My question at this point, and I guess I would like to ask that you consider striking this from HB 10, because quite honestly, it's probably going to represent about $2 million across the state of Louisiana at the 0.45, not at 0.4.
Thank both of you. I'm not seeing any questions from members. Oh, sorry, we do have a question now. Trying to get you up.
It's not very receptive.
All right, let's try it. Okay. No.
Something like
All right,
these credits.
Senator Bowie.
Thank you, Mr. Vice Chair. You spoke about the vendor's compensation credit. Correct me if I'm wrong. It's like $1,500 per month, and it sort of mitigates the collection and remitting of that tax. What do you think the impact would be if that credit goes away?
I mean, it's just, again, this is a burden that the vendors are taking essentially on. I mean, yes, to help collect the money from the state. So For smaller retailers, this $1,500 a month is a significant amount of money to help defray that cost. And they only get it if they timely pay and timely remit their return, and if they timely file their returns. So it also currently, it actually does in fact encourage that, that voluntary compliance in its current form.
Thank you. Thank you, Mr. Vice Chair. That was
Right. Thank both of you. I see no further questions from members. We'll call up other witnesses here for information. Catherine Domingue, Matt Brady, and Don Cafferty. Yes.
Matt Brady's going to wait. He's going to do after that. You've already called those three.
All right, this is the ladies' first committee. Oh, so it's a gentleman's first committee.
We'll do brief introductions real quick,
Okay.
and so
Go
we'll
ahead.
Yes, I am Catherine Domingue, and I represent Slimco in Lafayette, Louisiana. We are an electric utility cooperative that serves the Acadiana area. So we serve Lafayette Parish, Vermilion, Acadia, St. Landry, and St. Martin.
Good evening. Oh, I think it's evening now. I've been here a while. Myron Lambert, General Manager for PC Electric, Point Capee Electric. We're an electric utility cooperative serving Point Capee, West Baton Rouge, and Iberville parishes. Thank you.
Yeah, good afternoon, Mr. Acting Chair, members. Don Caffrey here on behalf of the Association of Louisiana Electric Cooperatives. That's 7 cooperatives across the state, representing a little over 1 million people, I believe, with Point Capee, Slimco, some of the other cooperatives. We're looking at about 1.5 million people across the state, particularly in our rural areas. We're here today to discuss some language that is in House Bill 10 and Title 12, Section 425. That removes the sales and use tax exemption from the electric cooperatives. We've been working with the department since we first saw the language, because later in the bill, in Title 47, Section 305.5, there are some sales and use tax exemptions that are put back in place for residential, wholesale, machinery, and equipment. As we're looking at some of these definitions, because of the wholesale repeal in Title 12 that simply says the sales and use tax exemption will not apply to electric cooperatives, we have some concern that for the first time, our nonprofit members, which are owned by the ratepayers, would now have to absorb that sales and use tax. Unfortunately, that means that 1.5 million or so residences and businesses throughout rural Louisiana particularly would have to absorb that onto their utility bills because the member cooperatives simply don't have the cash flow and the balance to absorb that themselves. And so we're still working with the department, trying to get some clarity on this issue for you, but we wanted to come and certainly bring this to your attention, answer any questions that you may have regarding that provision in Title 12.
I'm not seeing any questions from members. Any other information? Thank you.
Thank you for your consideration.
Thank you.
So we have next Mr. Matt Brady.
Thank you, Mr. Vice Chair and members of the committee. Hopefully we'll get you home for dessert. I am Matt Brady. I'm the Vice President General Manager for Enterprise Mobility, operating Enterprise Alamo and National Car Rental. Today I'm representing Cartrala, our car rental and truck rental leasing association. And we've been working, we obviously know this is a big, complex tax reform. Been working with the governor's office, the department, and Senator Reese to try to look at potential amendment on House Bill 10. We have an exemption in there currently that is being repealed for the tax on new car purchases for rental and leasing. Removing this exemption would have a negative unintended consequence on Louisiana residents, as well as we would be a big outlier. So I brought a map today. We would be the only state in the United States which does not provide this exemption. I'm not sure we want to be the first. 94% have the exemption language. 6% of the states don't have sales tax, so they don't need an exemption. Currently, when we rent, when we lease, we remit sales tax. When we go to sell that car, we also remit sales tax. This would be double taxation on a business input, which American Tax Code would say is somewhat of a no-no. Ultimately, though, the Louisiana consumer would be the one that would bear the brunt of this with rising rates, as well as our insurance industry, with 40% of our overall rental days going out being billed to insurance companies. One of the other last points that I will make is that over 80% of our rentals are to Louisiana residents. So I know that there's a common misperception that we get a lot of people in here flying into the airports, renting vehicles. It's actually 80% plus are people that live here, work here, that are getting their cars serviced, their car in the shop for repairs, body damage, things like that, or just need a vehicle to get to home and work and to doctor's appointments. So with that, I would be happy to take any questions that you have.
We do have a question from Senator Lambert.
All right, so the way it's, all right. So what's happening now, we don't pay the sales tax on when you buy a vehicle.
That's correct.
If you're renting it.
That's right.
So if you started having to pay the sales tax on it, are you going to have to increase your rates?
Well, there's two potential outcomes. One, there would be the case for a tax trade situation, which we would then ask to not remit sales tax when we rent and lease that vehicle, which just for my company alone this year will probably generate $30 million in revenue on sales tax. The new car tax on the purchases wouldn't even make up half of that difference. So that's one potential. But yes, it would eventually become a business pass-through if that were the case.
Because you'd have to pass that on.
That's right.
And how much is the typical price of a new vehicle that y'all are buying to rent?
$32,000.
Okay, thanks.
Yep.
Question from Senator Wheat.
Yeah, along those same lines of questioning. So when you're purchasing vehicles to ultimately go to the consumer, how much percentage of the vehicles are being bought currently in Louisiana versus that are being bought outside of Louisiana at this point?
Yep, good question. So we do have a central buying system out of our headquarters in St. Louis where we buy directly from the manufacturers. That's probably 95% of how we do our buy. We buy, for my company, because I can't speak for the others, but we buy between 500 and 1,000 vehicles here in Louisiana from local dealerships each year to make up for any inventory that we might need, especially an event like the Super Bowl, things like that. That we would use for surplus, but most of those vehicles are bought nationally and then sent here, which again is another good point to make. Of we have plenty of surrounding states here. Do we change our business model, which could impact Louisiana as well in getting vehicles into the state?
So I think that's my exact point I was trying to get to was if we enact a tax on that sale, it becomes very easy to say we have other options to go outside the state, and so it may have a negative consequence in what we're trying to do.
That's correct.
Thank you.
Question from Senator Reese.
Thank you, Mr. Vice Chair. Just letting everybody know, and I know you alluded to it as well. So we have this issue as it relates to these automobiles. We also have this issue in the bill related to heavy equipment and other pieces of equipment that are in a similar situation. And to let the members know, we do have an amendment drafted that I believe there's a good bit of consensus around that would seek to address that, so we don't become an outlier on that issue or create a double taxation issue as well. So.
Yeah, thank you for saying that. Yes, we are again in support of trying to move tax reform forward. Just trying to clean up some language. So thank you.
Yeah, appreciate it. Thank you, Mr. Vice Chair.
All right, I don't see any other questions from members. Thank you, Mr. Brady.
Thank you, Mr. Vice Chair.
All right, we have some red cards here from persons who are present and wish to speak in opposition. Ms. Vesica Elliott? Vesica Elliott?
Jessica.
Oh, that's a J, Jessica
That's a J,
Elliott,
yeah.
okay. And Mr. Ricky Landry. Once again, this being a ladies first committee.
Yes.
Introduce yourself and please testify.
Sure. Good afternoon, Mr. Vice Chair, members. I'm Jessica Elliott, Executive Director of the Louisiana Retailers Association. And I'll be very brief because Ms. Hebe covered a lot of what we were going to cover in this, but just a couple of points. We did submit a red card, but we're only opposed in this bill to the repeal of vendors' compensation. It's a very slight credit. It's 1.05% of what you're submitting in sales taxes each month, but the effective rate is 0.944% because you don't receive the vendors' comp on the 0.45. So you're only receiving vendors' comp on the 4% of the 4.45. Another concern is that with our reading of the bill, it would repeal local vendors' comp too. So the local vendors' comp credit is it's different from jurisdiction to jurisdiction. So you're looking at 1 to 2% based on what parish you're remitting in for local vendors' comp. So that would be a big impact for retailers. Also, the $1,500 cap monthly in the state vendors' comp, that is per company, so not per location. So if you have 12 locations in Louisiana, you're getting $1,500 a month. So I just wanted to make sure this is not a windfall for any large retailer. It's just compensation for doing the work to act as the agent for the state.
Thank you. Hi. Thank you, Mr. Vice Chair and members of the committee. My name is Ricky Landry. I'm the CFO for a local company, Zappardo's Family Supermarket in Metairie, Louisiana. I'm here representing them, and I'm also a member of the board of directors for the Louisiana retailers and working with them hand in hand for over 40 years. Personally, I handle sales tax in our stores and everything. We've been in business for over 90 years, and we are Louisiana-owned, Louisiana-operated. In our latest expansion, we expanded our facility to increase 175 jobs in the state of Louisiana. We sought zero compensation or zero LED credit dollars for that expansion. We took it upon ourselves and our business model that we wanted to help grow in our business and help the state at the same time. Currently, we submit over $3 million per year to the state and the local governments in sales tax collection. As part of that sales tax collection, as many of you are aware, most people that come to the grocery store pay in the form of a plastic card, a debit card, a credit card, a SNAP benefit card. All of these cards incur cost. As a direct cost to us, we are charged, and retailers average between 1.5% to 3% of their sales. So I'm paying a fee to collect sales tax for the state of Louisiana, in addition to having to keep up with the state of Louisiana in the complex code, as you're quite aware of. And then we're getting compensated on average about 1% of that fee back for that acting as that agent. So clearly, if you do the math, we're not in business to do things for nothing either. We're just asking for a fair level of compensation. And the tax codes are quite complicated and vary from parish to parish. So what we're asking is that this portion, which, as Representative Wright clearly stated, that it was an insignificant amount, that they made the change from the 4.45 to 4.4% of only $30 to $50 million. However, he also stated that the vendors' compensation was only about $30 million to the retailers that are collecting these taxes. I think it's a fair trade-off that we're doing a service and a job for the parish and the state. We're acting as that agent. We're responsible for the collection of those funds. We're responsible for timely remittance of those. If not, we are taxed and penalized for that. If I make a mistake on the return, I have to go through the audit. I have to justify everything that we do, and we have to maintain tax codes on in our store over 40,000 items in the store. It's not as simple, and it's not an automated task by any means. So I am asking for your consideration to remove that and reverse that and put the vendor's compensation back into the bill. Thank you.
All right, I see no questions from members, so thank you for your testimony. We do have a red card here present, but do not wish to speak. Ms. Ashley Shelton with the Power Coalition. Present, do not wish to speak, but I think he has already spoken. Mr. Billy Wales with the Blood Center. Okay, Representative Wright, you wish to return? Have anything you need to add or anything you need to cover that may have come up with that testimony?
Listen, I think everybody that came up has good arguments. I mean, I think I said that early on. It's an exercise that's pretty difficult. I mean, it's hard to always understand, where do you go from it. But at the end of the day, we have a bigger picture, as you know. So I trust that you all will, make the right call on the exemptions and things like that may need to be taken out. But that's all I have. Thanks.
I think the chairman is asking that these bills be deferred and moved to tomorrow, so we'll make that motion. No objection.